your fund concentrates on industrials, and it has. And that used to be, dare I say, an atypical private equity bet because it's heavy industry, lots of assets, maybe margins aren't so good. It used to be things that the favorite child of private equity was like tech and software. And some of that has started to become problematic. Do you think that this is an industry that's going to start coming around to your thinking, and especially the build out of the US, the AI, that industrials becomes a more attractive target for private equity?
Well, there's lots of people with different strategies, and they're great in what they do. We like industrials because industrials with, as you're saying, tech and software have been the two biggest sectors in private equity deals, and they have about the same return on average. And what you need to bring to industrials is a history and an ability to make those companies better, because at the prices you have to pay today, doing the same thing doesn't help enough. And so we're fortunate to have a 50-plus person resources group, functional operating people that help our companies' management teams do better. They don't do management's job, but they help management succeed. And a 30-plus year track record of focusing on this space. And so we're super excited about what's to come.
How does the talent pipeline look for operating partners who can help specifically with various AI build-outs? Because it is somewhat new, at least it's new in the pace that it's happening. Are you able to find the talent of people to bring in that can really guide companies through these transitions?
As a general statement, yes, we have a lot of external resources that have experience helping our companies with demonstrated success cases. But we find the better play is to, with the management team, think what is the technology application that can be super changing and focus on that. Doing it top down hasn't worked really well for the last 24 months, and a lot of companies have been trying, and we've been focused on it as well. But where you have a management team that says, if we can do this, we've done great things. So in FBM, for example, we helped management build a digital app. They deliver ceiling tile, wallboard, big construction projects to a big high-rise. If you don't know when that's coming, you can have management labor waiting around. So with a digital app, we can tell our customers exactly when the shipments will come on trucks and be offloaded in a 2-hour window. That saves enormous amounts of money for our customers, helps drive revenues and a positive customer-company relationship. So there are things like that can really matter. More obviously on a cost-saving side, again, an FBM example, a big contractor says, hey, bid on my ceiling tile, here's the plans. That used to take weeks to figure out how much ceiling tile and wallboard and other products they really need. You can throw that into AI, and it can tell you pretty quickly and with fewer errors what that is. So you can do it a lot faster and with a lot less people, and that drives a positive situation for customers and company.
How are you using AI internally at American Securities? Are you?
Oh, yeah. We are doing it internally as a screening mechanism. We look at every company that we're going to invest in and kind of run, I call it an IC co-pilot, and see what that says, just to get independent eyes. And our due diligence teams are using it all the time for market demand, whole host of things. Now, it's not always right, but it is always interesting.
Yeah.
And to prove what's right is right, and what it might say something that's wrong, that's where the art.
So you have essentially an AI IC member. If I get that right?
You can basically call it that. I mean, anyone can run these things because we have internal walled off warehouse of data where we can run, chat-like or Anthropic-like.
Yeah. Super interesting, Michael. Thank you so much for joining us. We appreciate your time this morning. Michael Fisch of American Securities.